Hello everyone, welcome back to Chill Deal Trades, where I break down stocks so you know what's going on. Today we're going to kind of do a few different companies, so let's get to it as quick as possible. We're going to cover Palantir, PLTR, SOFI, TTCF, which is TTCF, and then lastly finish with Wish. We're going to break down the recent earnings because they've all had earnings recently, kind of what it could mean for the company, the pros and the cons, as well as the charts to figure out where the price could be headed on a more technical perspective. If you're here and you hit the like button or really the follow button or the sub button, please join the squad. You guys are helping us get to 500 subs. That's the goal. Once we get to 500, we'll be doing a live stream on either Friday or Saturday nights together where we can kind of look at the market as a big group. So help the channel get there. That's our goal, 500. But let's first jump into PLTR first, Palantir. So Palantir stock, they've had really positive, price action off their earnings. They went up, I think, like 15% or something like that. And so I would say some good things overall for the company. There's a lot of optimism around the stock. Kathy Wood was buying into some shares again, so that also pushed up the price a little bit. But when we look at the earnings, so 4 cents, their earnings per share, they hit the target and they slightly beat revenue by about 20 million. So really positive. I think what people are most optimistic about is this 49% year-over-year growth. That's going to be really important for the company because Palantir has expressed that through 2025, they're expecting an annual revenue growth of 30%. So them staying above that 30% and beating it is a really important sign for the company that they can keep revenue growing. In the last video, I've covered Palantir quite a few times, so you can watch those videos, but we talk a little about how they're expanding their business. I'll put a link to that video, but all these things are potentially going to help them keep up that revenue growth. But this is the key, guys, right here. They have to keep this earnings above 30%. 40, 50% is going to keep having these jumps on earnings, so that's really what we're going to want to see. My main issue with PLTR, as I mentioned this before, is just their valuation. Their market cap, their valuation is 50 billion, and right now they're about a $2 to $3 billion business. So the multiples are insane, but the company has a lot of love. They have a lot of big people backing them, which are, I would say, extreme positives for the business. We've kind of talked about it before, but diversifying their business, trying to bring more small businesses in. So there's a lot of positivity going in there, but my main issue is still the market cap. I'm really curious what you guys think. Do you think the market cap's too high? Do you even look at market cap? Do you think that should even be a factor that we're putting in the equation? But lastly, with Palantir, before we get to the charts, I want to look at institutional buying because it's something I always look at, and we're continuing to see a lot of buying. We saw last quarter, there's a bit of selling. Kathy Wood sold out, I think, a bit, some other people, but we're seeing a lot of buying into Q3 as well. So as long as we see this buying pop in really high, we're either going to stay around that price and they're just going to be accumulating sideways, or that's going to continue to push the stock up higher. So always look at institutional buying. That can give you a really big positive or negative for a stock. Let's go into the charts. And so obviously we see here, we're just under, I guess we close the day about 24.69. Some positives that we can definitely call out on this chart, because we're seeing more positive than negatives lately, is we broke above that 50 on RSI, which is showing that we could be coming into a more upward move for this stock. But due to this gap on the market, this is either going to be a gap and go, which is gaps up and then just momentum continues to keep it higher, or it's going to come back and test. If it does roll over, because we did hit a pretty important significant resistance area, we look at the chart, this kind of area right here is really important resistance, and we couldn't break above that. And so, that kind of tells me either we needed to relax a little bit, get some of the metrics, reset them a little bit to move up past that, or we're reversing off that and heading back to the gap. If we do head back to the gap, there's a pretty big support area there. As we can see on the candles, this little area is a really important range. And so if we do pull back, I want to see RSI stay above this 44 to 50 range. If we come back and bounce off that again and move up, that's extremely bullish for the stock. MACD, we're also seeing a lot of positivity. We are seeing the blue line start to get towards that 0. So if it does pump up above 0, I'll say that's a really, really positive momentum. But we want to stay above 0. We don't want just to hang out there. We want to see that momentum accelerate on the MACD. So those are a few things we're going to look at. We really do need to break above 26-ish for that positive momentum to continue. If not, coming back that 20 EMA and the gap and support potentially, and if we bounce off there, we could see some more positive price action. Next stop we want to get to is SOFI. So they had earnings today. Let's get to the earnings. And there were some pros and cons. So the main, I would say the biggest issue with their earnings, I've already expressed my concerns with the valuation of this company. I thought I had it up. Let me get that up for you guys real quick. I must have, 13 billion is my main issue with this company. Kind of like Palantir, super big valuation based on what they're telling us today in terms of revenue. But that always doesn't matter for growth companies. Now I'm all over the place. Where am I? Here we go. So the biggest issue with the earnings for me, and this is what I really want to mainly focus on, is this loss per share, EPS, 48 cents compared to a 6 cents expected. And why that's really important, when we look at analyst expectation moving forward, we see that EPS around that 4 to 6 range. And so if they can't pull up EPS next quarter, I would say revenue doesn't really matter as much, because that's telling us they're having to spend tons and tons of money to keep their revenue growth, and that's something you don't really want to see. I think it's okay to have a negative EPS, but seeing it stay above that 50 cents range, that's going to be an issue moving forward. So that's the main reason I personally believe that we saw such a big pullback today off earnings. I think we're down like 10% or something like that. A couple bucks, it might be more than that. I can't remember the exact amount. But that's the main thing I'm looking at in terms of earnings. I said that there's a lot of positives for their platform. Let me see if I had that information here. I don't remember if it was on this one. So net revenue just about 250 million. So they're about $1 million a year, right, or $1 billion a year right now in revenue. And that's why my main $13 billion market cap just doesn't sit well with me. But let me see if they have the facts here. I don't know if I brought up the right article, but they're seeing really great user growth. Again, about 100% increase in user growth. So there's a lot of positivities we're seeing overall, but the valuation still bugs me. But a couple things more on the institutional front. So we did see both SoftBank and Red Crow Capital buy into pretty large positions or increase their positions significantly in Q3. So that's a really, I would say, important that we're getting big backers behind SoFi. This is going to help, I would say, potentially, unless they sell out, which someone who buys in that big probably isn't selling out. But it is creating somewhat of a floor in the stock, which could be a positive sign for them. And again, about 400 million in this quarter, or 300 million bought in this quarter in institutions. So those are, I would say, some good positive momentums in terms of the institutions buying in at these low prices, and that's something we'll want to keep an eye on. So let's go to the charts, because it is down pretty significantly. I've mentioned in my last videos that I just wasn't happy with this valuation. That's why I'm not buying in yet. And we've kind of had, I would say, we kind of had Kramer pump this a little bit, if I'm honest. He's been on mad money, kind of telling people to buy this stock, that it's a buy at this prices, and that's why I think we got this movement up from $14 to $17. But obviously we don't like that price action off earnings. But one of the biggest things and I call this out in my past videos, the price I was looking at was this $18. And if it didn't go above 18 bucks, then I wasn't buying in this stock. We saw it break above the 20-day, which was a big positive, but like I said, I think that was kind of part of it was off of Jim Cramer kind of pumping it and getting new eyes on the company, which is important for them. But I just wasn't ready to buy in because I really didn't see until they break above that range. And so now after hours, we have it about 1575 last time I checked. And we're kind of in this really important support range. And tomorrow I'd really be looking for analyst updates on the company. I think that's going to be really important. We're probably going to get some downgrades in price potentially, just based off some of the numbers they released on earnings. So that's really what you're going to want to be looking at tomorrow. And if we do see some negative price action based off some of those analysts, if we do see that, we really have to hold 1475-ish. If we don't break around 1475 range to 1450, I would say, then we're most likely going back down. We're going down to $13 range. So those are things I'm going to be looking over the next few days, what those analysts say, and if there's any other negativity, because negative news always likes to stick together. So if we see further negativity come out, that's something you're going to want to look at for SOFI. But we could also see a reversal, and if that's the case, we really need to get back above that 20 EMA, and we need RSI to stay above 50. So if we do move up to that 20 EMA, it's around a really important resistance range, which is 1665, and then again above that 200-day EMA and that big resistance at 1785. This range is what we really need to break above, and if we can't, then we could potentially see a test of this low again, which is a big floor. But if there's enough negativity, it could push down below. Okay, I got to speed up a little bit because I don't like making videos over 15 minutes. But Tattoo Chef, I'll quickly go over it. Again, my main issue, this is a food company being priced as a tech company, but there's a lot of love behind this stock. There's a lot of retail interest in it. I personally believe it's overvalued based on the industry. I'm really curious what you think. When we do go to the earnings, there was some positivity there. Increasing sales, I think it was 62% or 45%, and revenue growth of 50 million. So, if we take that moving forward, maybe they're about a $200 to $300 million company. But again, I still think they're kind of priced as a tech company, which is probably a little overvalued. We do see that, the vegan or non-meat brands or fake meat brands, often have a higher valuation, as people think, going meat or I guess vegetarian or vegan is the future. But I still think they're overvalued, personally speaking. I think that's most. I'll do a deeper dive on these. I haven't did a full company dive on this company yet, so I'll probably do that soon. So watch out for that video and sub for that coming out. But that's just the main thing I wanted to pull in the earnings. Some positivity, but some negative, also some not so positive. And I think that's why they're down. When we look at institutions, they are continuing to buy. It's not a whole lot of buying, so it doesn't really tell me much in terms of expectation, but we are seeing more buying than selling, so that is a positive. But let's get to the charts. So after hours, we're at about 1850. So this is kind of an important range. I would say they broke below this $19, which is pretty big support when we look at the charts. We look in this range. And so I would say we really want to see it get back above 19. Even if it goes sideways, just being above that 19 is really important for bullish momentum. And on that pullback, now we're pretty far away from the EMAs. So the 20, 100, and the 50 are all about this, around this $20 price target, or $20 price range. And so we really have to get above that for any more positive momentum. Again, just like SOFI, we're going to want to see if negative analyst news come out tomorrow. If so, it could create some more downward pressure. SOFI is something I'd buy on the dip, lower. Tattoo Chef, personally not me. $10 to $15 is probably where I'd be more excited with this stock, personally speaking. But these are just things, these kind of price points is what you want to look out to get. Look out for the next week or moving forward. And 1650 is really like 15 to 1650 is like, it needs to hold that support range, as that's such an important support. If not, then this stock is going significantly lower. Lastly, Wish. I've been telling these people on my channel forever, do not buy Wish stock. If you're buying Wish stock, you don't understand how the economy is going, as well as their business model. You want to stay away from certain e-commerce because people are going back into stores. And that's what we saw. We're down 20% on earnings. This is a stock I'm staying away from. I'm not even going to do a technical analysis on it. I think this is going to continue to see weakness for the rest of the year personally. It's still a $5 billion market cap. People are like, a couple $1 billion in revenue. It doesn't matter if your revenue is decreasing and your EPS is decreasing. It doesn't matter what the valuation is. Kind of as the reverse was for the companies we just covered. So I'm staying away from this. If they go maybe to $4 or something, I would consider buying, but nowhere close to these price points. I just wanted to quickly highlight that one. But thanks for tuning in, guys, and I'll see you again soon.